It's not the rich who need the fair tax, it's you. Here are 63 reasons for the fair tax. Can you help us get to 100? Add one or two or more in your comments below. If you're counting on a pension, its fund is probably invested in the stock market. Historically, the market has only grown when the economy has grown. The fair tax is needed to unshackle the economy, so your pension will be there when you need it. The payroll, income, and capital gains taxes we have now discourage work, productivity, and innovation. To avoid this, the fair tax taxes consumption instead. You get to control how much tax you'll pay. The fair tax eliminates payroll, income, gift, estate, capital gains, alternative minimum, Social Security, Medicare, self-employment, and corporate taxes. Instead, the fair tax taxes 23 cents on every dollar spent in the final retail sale of new goods and services purchased in the United States. The embedded taxes that are now imposed on manufacturing, distribution, and profits are eliminated. Since these amount to 20 to 22 cents of your purchase cost, the fair tax is revenue neutral. The retail label price that you will see includes the fair tax. The very poor, actually everybody, will receive a monthly deposit called a prebate equal to 23% of income at the poverty level. For a family of 2 adults and 2 children, this annual prebate will be about $7,000. With this in their pocket, the federal tax will be zero for people who spend at the poverty level, half that, 11.5% for people at twice the poverty level, and the full 23% for millionaires. This prebate makes the fair tax progressive by untaxing the poor. For most people, the largest and most regressive tax is the payroll tax at 15.3%. It goes away. After receiving the prebate, everybody pays something for government. It collects taxes from about 18 million Americans who are wage earners but non-filers. The fair tax will also collect from 20 million foreign visitors, 12 to 20 million undocumented immigrants, and an estimated $4 billion in the underground economy of criminals and others engaged in off-the-books activity. Having this broader base will be a good thing. You'll pay much less. The fair tax is less divisive. It treats everyone the same and does not punish or reward one group over another. Cooperation will replace class warfare. We might send different representatives to Congress. The fair tax will lead to greater respect for individual liberty. You'll never have to file a tax return. You won't be double taxed or triple taxed. Services are now 60% of consumer expenditures. They'll be taxed. Education is not taxed. Companion legislation will amend the U.S. Constitution to eliminate the income tax within 8 years. The fair tax eliminates 72,000 pages of tax code, which changes more than once a day. The Fair Tax Act itself is only 131 pages long. It will eliminate about 1/2 of the lobbying effort in Washington which goes into gaming the tax code. These lobbyists will be able to move into more productive employment. The fair tax will eliminate $430 billion of taxpayer compliance costs, helping most of all the poor who pay the highest percentage of their taxes to comply. These compliance costs are unfair to very small businesses, 15% of their revenues. The fair tax will eliminate the tax gap, in which 1/5 of the income taxes that are owed are not paid. This is estimated to be another $430 billion. Taxes will no longer penalize your extra work and effort, and will no longer be biased in favor of leisure, consumption, and debt, instead of work, savings, investment, and entrepreneurship. More savings will create more investment, innovation, jobs, growth, and higher future living standards. Taxes will be neutral across industries and international borders. Businesses and individuals will make efficient decisions rather than distorted decisions based on after-tax effects. The U.S. corporate tax rate will no longer rank 33rd highest in 34 OECD countries. The U.S. will no longer be 124th in World Bank rankings of total tax cost, 47% imposed on businesses. The U.S. will finally join more than 50 nations that significantly reduced their highest marginal tax rate in the 1980s and 90s to great advantage. The U.S. is the only major country that taxes foreign earnings. With the fair tax, multinational companies will repatriate their foreign earnings to the U.S. rather than keeping them abroad to avoid 35% in residual taxes. Since U.S. multinationals hold an estimated $1.4 trillion in foreign earnings overseas, even a temporary reprieve from this repatriation tax, according to one study, would add 1.3 to 2.5 million jobs, boost government revenues, and increase GDP 178 to 336 billion. Federal corporate income taxes, less than $200 billion, are 1.3% of GDP, but the way we collect them discourages foreign companies from locating here and causes our multinationals to locate plants abroad, where taxes are 9% lower. The fair tax removes income and payroll taxes for producing goods in the U.S. and selling them abroad where they are taxed again. In a survey of 500 European and Asian businesses, 400 said with the fair tax they would locate their next manufacturing plant in the U.S., and 100 said they would move their corporate headquarters here. Exports will soar. Jobs will return to the U.S. Tax-free trade zones for foreign goods in U.S. retail stores will disappear. Our tax system will no longer encourage consumption of foreign goods. Our tax system will no longer drive plants and good jobs out of the country. Foreign production sold in the U.S. will pay the fair tax. Instead of taxing income multiple times, the fair tax taxes income once when it's consumed. Revenues from a consumption tax are more stable over the business cycle than revenues from an income tax. The fair tax would have reduced the federal deficit in recent years. 91% of households will be better off over their lifetimes as a result of the fair tax. The present tax code bribes corporations into becoming over-leveraged using debt rather than equity financing, because debt interest is tax deductible and dividend payments are not. The fair tax levels the playing field. Each year the IRS examines about 110 million individual income tax returns and audits more than 1.5 million. Under the fair tax, this would all go away. The simplified fair tax will lead to greater compliance. Tax evasion will go down. IRS civil penalties on 37 million individuals and almost 9 million businesses, as in 2010, will no longer be necessary. The number of retailers reporting sales will be about 1/7 the number of individuals and businesses that now report income. Retailers will not want to risk reports of non-compliance, just as compliance is not a major problem in the collection of state sales taxes. 45 states that account for 97% of sales already have a state sales tax. States and retailers will each be paid about 1/4% to collect the fair tax. The 30% of tax revenues that it now costs to collect the income tax will be reduced to less than 1% of revenue to collect the fair tax.